If you're chasing the lowest rate to pay off your large mortgage faster, but still feel stuck with a big debt, you're not alone. Tune in to What Will Help. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I empower landlords with financial strategies to help them save money, decrease the interest that they pay to the banks, and lower the taxes that they pay the government. So, this is what's happening. Many individuals believe that getting that lowest rate instead of 4.5%, 4.49% will make the difference. But it won't. When it comes down to paying off your mortgage, which is a majority of Canadians' goals, is to get rid of it, it's actually to go into more debt. Let me explain to you how that works. So when a client comes to me and they're like, Sylvia, my mortgage is up for renewal. We are looking to get into the lowest rate. What can you offer? My answer to them as a mortgage agent for the last 20 years, if you're chasing rates, go to ratehub.ca, ratehub.ca. All the rates here in Canada are going to be listed there, and you can find the lowest rate. The broker's information is there. You can call them. Why am I giving you that information? Well, because I know what they offer. I know what they offer, and what they offer there is not available to many individuals. It's available to one individual. It's like a builder buying a new construction condo. It'd be like condos starting at $199, right? But there's only that one condo, and it's already been sold, right? Sold to a family member within for the builder. So what will help you pay off that large mortgage faster that has nothing to do with rate? It is going into more debt. It is picking up an investment property and then in 10 years selling that investment property. But there's even faster way. If you buy an investment property, rent it out for 10 years, have the tenant pay that down, have the equity grow in that property, and on top of that, stack another strategy called rental cash damming, you'll pay off your mortgage even quicker. So if you're a landlord that uses, 99% of landlords, they will take their rental income to pay their rental expenses. So let's just say you get $5,000 in rental income. You put it into, it gets deposited into your account for you running your landlord business or into your personal account. And then your mortgage payment goes out of there, property taxes, condo fees, and you're like, okay, all in one account. It's nice and easy and simple. I just need to make sure money's in that account. But that actually won't help you reduce your own personal debt. What will help you is taking the rental income and doing a large lump sum payment every single month on your mortgage. So let's just say you have a $500,000 mortgage. Take your $5,000 and instead of putting it into your bank account, pay off your mortgage. Pay off your $500,000 mortgage. That's how you're going to get rid of that mortgage debt much, much faster. Now, you're probably like, wait, hold on for a second, Sylvia. If I'm taking the rental income to pay off my mortgage, who is going to pay the expenses on the rental property? Like the mortgage payments, the property taxes, the condo fees, the utilities, the insurance, etc. What you're going to do to tackle those expenses is use your line of credit. Use your line of credit that's secured against your house. The key component about rental cash damming, this specific financial strategy used by wealthy Canadian landlords, is to have a re-advanceable mortgage, meaning that as you pay down the mortgage, access to this line of credit becomes available. So Scotia has a step mortgage. CIBC, I believe they're called a home line or a power line. Bank of Montreal is called a ready line. So most of the 5 traditional banks have a re-advanceable line of credit, but they're not all the same. There are certain ones that are way better and makes things much, much easier than other lenders for re-advanceable line of credits. So, long story short, now let me explain to you why you're using this line of credit. Okay, so whenever you use your line of credit to pay for the rental expenses, now you can deduct the interest costs on that line of credit. So as a landlord, you complete your accountant completes a T776. A T776 outlines your rental property. So rental property 123 Sesame Street has rental income of $5,000 a month, $60,000 a year. And then you minus the interest costs, the property taxes, condo fees, utilities, insurance, any kind of repairs. But by applying this strategy called rental cash damming, now you'll have an extra write-off. And that's the interest cost on your line of credit. As long as you have followed exactly how to do rental cash damming, how to use that line of credit to pay off your rental expenses. I know it sounds easy. I make it sound easy, but it's not just a push of a button. Okay, you have extra write-off costs. And what that means is you've lowered your income, because by minusing all those expenses, you've lowered your net income. And then most of my clients are T4 individuals. They will pay their taxes up front. And then by applying this strategy, the government will be like, oh, wait, hold on for a second. You've actually overpaid in your income taxes. Let me give you back some of your hard-earned money. And that, my friend, is rental cash damming. That will make a dent on your super large mortgage debt and get rid of it faster. I have helped individuals get rid of that mortgage 8 to 12 years earlier than planned. And now that you have no mortgage 8 to 12 years earlier than planned, let's just say you start on a 30-year amortization and now you're down to 15 years. What are you going to do? Can you imagine life without having to make mortgage payments? What would you do differently with your life today? What different decisions would you make? So stop relying on rate to solve the problem of getting rid of this big debt. Instead, use rental cash damming, which is a powerful strategy that reallocates your rental income to reduce your personal mortgage debt faster. By implementing this approach, you'll free up your cash flow, you'll reduce your debt, and you'll move closer to retirement, mortgage and stress-free. Want to learn how it works? Comment melt below, and I'll share with you a step-by-step guide to help you get started. Let's make your rental income work smarter, not harder. And by the way, did I tell you that this strategy is CRA approved? That's right, my friends. CRA has approved this strategy, this financial strategy that will help you pay off your big, large mortgage much, much faster than your current plan. Do they publicly announce this strategy? No, absolutely not. They keep it hush hush, right? Because they lose money anytime someone uses it. My friends, rental cash damming is an absolute must for all landlords. Comment melt below, and I'll send you a step-by-step guide to help you get started. Hello, my friends. My name is Sylvia Ho, and I'm a financial landlord consultant. I'm also known as the cash damming queen. I empower landlords to save money, reduce their taxes, and cut the interest that they pay the banks. Thanks for listening. And if you love what I am saying every single week on Wednesdays, where I give you different strategies, please comment below. By commenting below, it encourages me to do more of these videos. Thanks so much. Bye now.